Ishmael wanted us to look at the Nasdaq index. Now, again, we know that the technology shares of the US are all listed in this basket of technology shares. But Ishmael, we can clearly see there's a distorted head and shoulder formation. Now, a double top, triple top, and head and shoulder formations are all warning formations, and we should definitely take note of them. So that neckline is being tested at the moment, and it needs to remain a support. Otherwise, this formation will be confirmed. Now, that neckline is waiting there at 7,514. So if the Nasdaq index starts to consolidate below this on a weekly graph, we can easily see, and let's measure the conservative target of the Nasdaq index. We can easily see it at $7,054. But take note, it will change this 40-week moving average into a resistance. Now again, then the long-term sentiment will change to negative, and the full target of this head and shoulder formation will take this index back to 6,827. Some might say, Christelle, this is a very distorted head shoulder. The right shoulder is a lot bigger than the left shoulder. Needless to say, there's a pattern that implies lower highs. The high there of 7,956 on the week of the 9th of September is lower than the high there of 8,015 in the week of the 22nd of July 2019. So Ishmael, lower highs are clearly in place. So if this index can't keep this neckline a support, I would take note and consider taking profit in the Nasdaq index. So obviously Ishmael also wanted us to look at Netflix. And there is, on Facebook, there's a head and shoulder formation. On Netflix, there's a double top. And we're going to look later at Amazon as well that's got a warning pattern on it. Now, Netflix, we can see, had this massive double top formation, and that started around the 22nd of January 2018. It found beautiful support there around 24th of December 18. Again, it bounced, but look, take a look, not as high as this high of $422. It only went to around $385.43 and immediately lost momentum, and now it looks like it wants to support it a little. But if this neckline of $240 changes into a resistance, we can see Netflix a lot lower. And again, what is the target of this formation or lower high? I can take the width of the one leg and project it downwards from where it was confirmed. That means Netflix can go back to $96. Yes, it is very oversold at the moment on my stochastic indicator, which makes the probability of a bounce to higher levels more likely. But we can see that this double top formation is a warning formation. And very important, the stock has changed this 40-week moving average into a resistance. And we can see actually since October 2018, the stock has just gone sideways for long-term investors. It hasn't really trended into a direction. So some might say that this is now a perfect opportunity to buy again, but I would be very hesitant because of this double top formation. Let's have a look at Amazon. And John wanted us to look at Amazon. And as I've said, there's a lot of warning patterns on all these major FANG stocks. And again, a double top formation. Now that double top formation, John, was already confirmed when Amazon started to consolidate below $1,773. Secondly, that red line, that 40-week moving average on Amazon changed into a resistance. It tested it in the week of the 23rd of September. It could not keep it a support. And in this week, we can see it did not even try. The buyers could not even try to go and test that 40-week moving average at the $1,789. And that the target of the double top is, again, let's take the more higher target of the right leg of that double top. And if we project it downwards, it means that we can see Amazon again at $1,541. So the critical neckline, that critical level is $1,773. Amazon needs to change that into support in order for us to take a little bit of a sigh of relief that we might see higher levels. But this double top formation will only be wiped off the table when Amazon starts to consolidate above $2,025 again. Below it, this warning formation will remain on the table. Corsi wanted us to look at the Seng. Now, we know this is the index of the Hong Kong Stock Exchange, and we know that they have been struggling with protests for months already. So I assume, Corsi, that you are looking for an entry level on the Hang Seng and that you are looking maybe for a possible in year. But Corsi, I've got a bad news for you, because there is also an ugly head and shoulder formation. Yes, it's already trading below that 40-week moving average, which is obviously has changed the long-term sentiment towards the Hang Seng to negative, and that weighted there around 27,808. But we can see that this index, the Hang Seng index, is approaching that neckline fast. And that neckline is waiting there at 25,455. And if there's no buying power, and if the buyers did not start to protect this index, we can see it a lot lower. Again, my conservative target for that head and shoulder formation is, first, let's take the right shoulder, because that looks like the smallest one of the two. And we project it downwards from the neckline where the formation will be confirmed, which means my Hang Seng index can go to 23,539. What can it do if I take the full target of that head and shoulder formation? It can take the Hang Seng index to 20,511. Of course, I would be very hesitant to enter now and to maybe look for a buy opportunity at the moment. Let's rather wait for this formation to be wiped off the table. And that will only be when the Hang Seng index starts to consolidate above 27,388. Only then would I be able to say this formation is obsolete now. Let's see if it can find enough buyers to lift it back to its 40-week moving average and change that 40-week moving average into a support. And that's waiting at 27,808. And only then can we maybe see higher levels. There's also a window there on the Hang Seng, and that is waiting between 29,620 and 29,480. Now, of course, the rule of windows are they always get closed. It can take days, weeks, months, or even decades. And especially on a weekly graph, that weighs very heavy. And that is a nice possible target for the upside should this index at some stage find support and turns around to higher levels. Andrew wanted us to look at Aspen. So let's go back to our local market again. And Andrew, I can see why you like this share. And to be quite honest with you, when a share consolidates sideways like that, especially when it comes from such a low base, it often maybe gives us sometimes opportunities. Why? Because the stock has plummeted to lower levels, but has stopped making lows. And it seems as if the buyers are definitely protecting it for upside. So the consolidation band on Aspen is between 88 Rand and 80 cents and 110 Rand 86. Now we can see the stock is at the moment fighting that lower band. And I've drawn in that trend line there because I want to see this as a false break or a whipsaw. So it took that consolidation band downwards. It played out completely. And now we need to see if they can keep this support this level here, a support that was previously tested it as a support, and keep it one. And that is waiting at 69 Rand 19. So hopefully the share, if it wants to retrace further, find somewhere support. But the critical level here is under, the support needs to be a little bit higher than the support level there around 69 Rand 19. So if the stock can find support somewhere here and lift itself up to higher levels, when it starts to consolidate above 101 Rand and 6 cents, a higher low will be confirmed. And that will be seen as positive. So at the moment, I would keep an eye on this share at the moment. If there is a beautiful turnaround candle or turnaround pattern, then maybe it would be a good place to enter. But that 40-week moving average is still a critical level for long-term investors because we can see it is an indicator or an average that treats this share and warns this share time and time again. So above this 40-week moving average, and under that is waiting at 105 Rand 57. Above it, we can assume that the long-term sentiment towards the stock has changed to positive. So yes, My stochastic is not even overbought and has already broken downwards. And that tells me, or that implies, a loss of momentum. It implies that the buyers were not strong enough to lift the stock and continue to lift the stock to higher prices, and that the sellers came in and sold it off before it was even overbought. And that is negative. That implies that the sellers, to a certain degree, is still in control. But I think, Andrew, it's a nice graph to keep on your radar. I think that it might be a turnaround story. I mean, if we just go back, the last time the stock traded around these levels was in January 2012. So yes, we know they've got a lot on their plate to turn this company around, etc. But the technical graph tells me that this might be a beautiful turnaround story. If you've got any questions, please feel free to send us an email at admin@fransdeklerk.com. Have a fabulous week. Cheers.